You may have seen reports on social media over the last few years that real estate prices are going to plummet. The market's going to tank. It's all going to hell in a handbasket. Well, let me tell you, you've been lied to. Most people making these claims have no real estate backgrounds, they're not licensed, they don't invest in real estate, or really have anything to do with the industry whatsoever. If you've been one of the folks listening to these self-proclaimed experts and have sat on the sidelines for the last few years, you've missed out on record appreciation, and I don't see that changing anytime soon. In this video, I'm going to share with you the 5 reasons why I do not see this market crashing. And if you don't get in the market sooner or later, you're going to continue to miss out. If you stick around to the end of the video, I'm going to share with you some Richmond specific data. If Richmond is an area you're considering moving to, relocating to, you're going to want to act sooner than later, and we'll get into all that. We're going to get into it right now. If this is your first time to the channel and you want to know everything there is about living, sleeping, playing, working, eating, the good, the bad, about living in Richmond, Virginia, and the surrounding counties of Hanover, Henrico, Chesterfield, DuKent, Goochland, and Powhatan, then subscribe below and tap the notifications bell so you can be the first to know about the current market in Richmond, Virginia. Also, if you can, leave me a message. Leave me a message below. Let me know about the current market in your area. My name is Scott Durnley with Joyner Fine Properties. My team and I get calls from folks like you every single day about relocating to the Richmond, Virginia area, and we absolutely love it. So whether you're moving in 9 days, 90 days, or heck, even 9 months, give us a call, shoot us a text, send us an email. All of that information is below, and we'll help you make a smooth move to Richmond, Virginia. All right, let's get into the number 5 reason why I do not think the market is going to crash. That 5th reason would be our baby boomer population. 1/3 of all purchases now nationwide are being done with cash. That is an amazing statistic. Baby boomers are now retiring at record rates, and they've had 10, 20, 30, 40 years now to build their wealth. As they retire, many of these folks are coming from the West Coast or from the Northeast, and they're moving south to areas like Virginia to take advantage of the lower cost of living. Interest rates are clearly not a concern for these baby boomers who are paying cash, so they have not been deterred from entering our market. Now, this tremendous amount of cash that's been flooding into the real estate market is really giving it strength despite the rising prices and despite rising inflation. Inflation and rising interest rates. So that is the 5th reason, is the cash coming into the market from baby boomers. All right, our number 4 reason is sellers really have an extremely low motivation right now to sell their home. With rates at historical lows over the past several years, no one really wants to leave these rates and hop into our new rates of 6 to 7%. 62% of all homeowners right now have a mortgage rate of under 4%. I myself have a 2.75% rate on my home. I refied at a perfect time at the absolute low. So it would take an act of Congress or some major life-changing event to get me to move right now. Now, there are buy-down options for mortgages, which could help mitigate these new higher rates. If you do not understand buy-downs, reach out to me. All of that information is below, and we can explain and talk to you about buy-downs in more detail. Now, I, along with many experts, do feel like rates will start to fall in the next few years. So there should be an opportunity to refinance if you're in these higher rates, just down the road. Now, I say should be, nobody knows for sure, but that is, common consensus at the moment. So there are folks who have sat on the sidelines for the last 2 years while homes were selling for $20,000, $30,000, $40,000+ over the list price, and they're just waiting for prices to come down. Well, what's actually happened over these 2 years? Interest rates have gone up, but prices did not come down. That's what actually happened. So many of these same folks who were on the sidelines are now still on the sidelines saying, hey, I'm going to wait for rates to come down, then I'll buy. Well, here is my advice to you. I would buy now and then refinance in a few years when rates are expected to come down. That way you can start taking advantage of the appreciation that is really expected to be happening over the next few years. So that would be the strategy I would employ if you've been on the sidelines for a while. All right, our number 3 reason is inventory is at an all-time low. Current reports show that there is a 6.5 million shortage in housing units nationwide. Now look at this in context. Right now, across the country, there are approximately 500,000 houses for sale, a whopping shortage of 6 million homes to satisfy that current demand. To give you an idea of the magnitude of this shortage, in 2008, just prior to the last crash, there was an average of 4 million homes on the market for sale in any given month of 2008. So current homes for sale right now are a massive 88% less than in 2008. Now this is simple supply and demand, Econ 101. Such tight supply is going to continue to keep housing prices up. All right, coming in at number 2 on our reason why the housing market is not going to crash is that we are squarely in a seller's market. In general, you are in a seller's market when there is under 6 months supply of inventory. A neutral housing market would be around 6 to 7 months of inventory, right in that range. A buyer's market is if the market is showing 7+ months of inventory. Now currently nationwide, we are sitting right at 3 months of inventory, which is squarely in that seller's market range. Now these higher rates have given buyers just a tad bit of relief in some markets, and they're causing sellers to show some signs of flexibility that we haven't really seen in the past. But definitely right now, we are still absolutely in a seller's market. All right, drum roll please, what you've all been waiting for. The number 1 reason why I do not believe the market is going to crash is average home equity is at an all-time high. In the last year, nationwide, the median home price has risen from $329,000 to $436,000, an over $100,000 increase. During that same period, home equity has risen from an average of $182,000 per home to $274,000 per home. The market right now is just not like the last real estate crash around 2008, which saw several years of massive appreciation leading up to it, just like we're seeing massive appreciation right now. That bust in 2008 was fueled by bad lending practices with things like no doc, zero down, interest-only loans. Simply put, just lots and lots of borrowers had zero skin in the game whatsoever, which was a really, really terrible lending practice. Now, once that market started to tip and value started to decrease, millions of borrowers were underwater absolutely immediately, and that forced foreclosures and short sales to spike, and that drove the market down. So you may hear, if you hear from so-called experts right now that we're going to see something like this again soon, think of it this way. If you had $274,000 of equity in your home, would you get foreclosed on? That is highly, highly unlikely. If a person in this situation ran into any financial difficulty, they could easily sell their home, and they could sell it fast, especially with such low inventory, and complete that sale well before the foreclosure process could run its course, because the foreclosure process does not happen overnight. So, again, I think the number 1 reason why our market is going to, continue to be strong is that average equity is at an all-time high. All right, so those were the top 5 reasons why I do not believe the real estate market is going to crash, and that the longer you wait and sit on the sidelines, the more likely it is you'll just be paying a higher price down the road, and you're going to miss out on a ton of equity in the meantime. Now I'm going to break down some data for the Richmond market. like I said I do at the beginning of the video. So we're going to break and hop on my computer and we're going to check out some stats local to Richmond. All right, I said we take a look at the local Richmond market. So let's start in January of 22. And we're going to concentrate here on Metro Richmond area, not necessarily our entire MLS, because that's where I focus in, is Metro Richmond. So we had an average sales price of $331,000 January of 2022. Then as you see, first half of January, we have some steady appreciation going all the way up to July, where we peaked out at $380,000 was our average price in Metro Richmond. This is when interest rates started to kick in and these new rates were coming into effect. And that gave the market some jitters. And as you can see, second half of 22, we just kept coming on down until we get to January, end of 2022, January 2023. So here we're 1 year later, but notice this, even 1 year later and even after this nice little fall, we're still at $345,000. We started the year at $331,000. So even after that slide, we're still $14,000 higher than the beginning of the year. And then what's really interesting is what happens now in 2023. Look at this jump. We get to June of 2023 and we've gone to an average price of $400,000. So in this year alone, $55,000 of increase from beginning of the year to June. And that is a total of $69,000 if you go all the way back here to January of if you go all the way back here to January of 22 to now, we are at $69,000 of appreciation. So what I think happened here in this year is people started to get used to the rates and sort of the new reality of the market. And then we really started to feel that effect of supply and demand in our short inventory and a lot of cash coming into the market, and really started just raising these prices up through this year. So think about this. In the last essentially 18 months, we've had 21% appreciation in the real estate market. So if we go back here and go 331 to 400, about 18 months, that's 21%. Do you think you would have made that if you put your money in the stock market? I don't think so. Real estate has been a wonderful investment. Now, I do believe this appreciation is going to continue. Look at the long-term trend we're seeing here. This long-term 3-year trend, it's just, there's some ups and downs. It's not a straight up line. Nothing in this world, is a straight line. But if you're looking at the overall trend, it's going up, and I expect this to continue. So my recommendation is don't sit on the sidelines anymore. Purchase now if you're on the fence, and then take advantage of this appreciation. And then down the road, when we think rates are going to drop, refinance then. So that's a little peek at what's happened in the local Richmond market for you. All right, so if you're unsure whether this is the right time to buy, is this the right time to get in the market, and the best thing to do is give me a call. Let's just have a conversation. I won't try to sell you anything. My goal is simply to arm you with the information so you can make the absolute best decision for you and your family. All of my information is listed below, and thanks again for watching.